Hi, everybody. Welcome to another series of the Endowus webinars. We are super excited today to have good friends and partners from BlackRock joining us. So we have from Endowus myself and Hugh. Hugh's our Chief Investment Advisory Officer, but also really excited to have our dear friend Deborah Ho, who's the Regional Head Singapore and Southeast Asia from BlackRock, and also Gear as I always get your name wrong, Gear.
Hesper.
Yeah, Managing Director and Head of Wealth for Southeast Asia from BlackRock as well. So thank you so much for joining us at your lunch hours. I hope you've grabbed your lunch and you're getting going. So please enjoy the session today. It's a really exciting session. We're going to go through the usual disclaimers from both Endowus and from BlackRock, and also our regular Slido. So if you have any questions for any of us, then please use the Slido. You can log on very easily by putting the password Endowus BlackRock, and then you put in the questions, and then also you can upvote. So if you have questions that are the most upvoted, then obviously we'll take the ones from the top. And we also have our MAS licensed client advisors and our investment office reps who will be also responding to some of your responses online, because we normally don't have enough time to go through all the Q&A live. So just a quick intro on Endowus for those of you who are joining us for the first time and don't know what Endowus is. Endowus's mission is really to empower individuals and families to thrive and achieve their goals through superior advice, institutional grade, personalized advice, and really access to better products delivered at a low fair cost. So really to help individuals and empower them to invest better, to live better. It is a Endowus employee-owned company, but we also have important, strong, strategic investors and shareholders, people like UBS, the biggest private bank in the world, the Economic Development Board's Global Investment Arm here in Singapore, and Prosus, Naspers, Singtel, Samsung, etc. Endowus is really not just another robo, as many people sometimes think. We really are about managing your total wealth. As many of you know, we are the first digital advisor for the Central Provident Fund. But also we've really been building out an institutional framework of investing that allows you to manage, across asset classes, across your investment horizon. So short-term money market funds to multi-assets, across the spectrum, and now from public markets to private markets and alternatives as well. So really is the institutional endowment, so Yale endowment, Stanford endowment type endowment investing for all of us, which is where our name comes from. We also have a unique product called the FundSmart platform, which allows you to access the best-in-class funds at the lowest cost. So instead of having 2,000 funds on a fund supermarket, ours is a curated platform where we have the best strategies and asset allocation frameworks and multiple analytical tools, so that you can not only select the best funds, but also compare them. So it's a comparison tool, but also you can build your own portfolio with multiple funds. So our investment office, which is led by Hugh, does a lot of institutional due diligence, both qualitative and quantitative, to screen for the best-in-class funds. So instead of having 20 US equity funds, we have the best and lowest cost funds accessible to you, through which you can buy single funds at the lowest cost or build portfolios with it. And really what's important for us is to provide you and come alongside you as a trusted advisor in this journey. Really implementing a scientific, hyper-personalized advisory process that is not just based on an investment objective of, I want to generate 10% return or 20% return. That's not an investment objective. The investment objective has to be your future liabilities, whether it's your retirement, adequacy, or whether it's your goal towards a home or college tuition for your children. Those liabilities are what should drive your asset allocation, the appropriate risk you take for that, and the right products underlying that build that portfolio for you. So Endowus has a total platform that allows you to build multiple solutions that is suitable for your future liabilities. So for example, in this example, you can have a rainy day cash fund through cash funds and money market funds, a passive income strategy where you have some dividend and interest coming through to you, and then the really long-term money, which will be, based on a strategic asset allocation to build wealth over the long term. And really, that strategic and passive allocation is what really sets us apart. That we're not trying to time the market, we're not trying to be tactical. This top-down, passive, strategic asset allocation, and then a technology that optimizes and then rebalances appropriately for you at the right time, wherever there's a cash flow, that helps you improve the probability of success over the long term. This is why we've continued to outperform all the other robos and digital platforms in terms of performance as well. And really, the final thing I would say, and especially relevant today, because the topic is passive index funds, which are low-cost solutions for individuals, especially those from BlackRock, which is the biggest index fund provider, both for index funds and also for ETFs, both very efficient tools to use. Cost really does matter. So especially in Singapore and across Asia, there are a lot of embedded fees that we don't know about even. So transaction costs and trailer fees that are commissions paid to the distributor, and often hidden, and therefore it isn't really transparent, and often it leads to misalignment. So the best products don't always rise to the top or are offered to clients, but the highest fee paying, highest commission generating products are sometimes pushed by the distributors. Endowus is really on a mission to improve transparency, raise integrity, and really all about restoring fiduciary duty of aligning our best interests to the client by not receiving a single cent from the fund managers. Any trailer fees or commissions that are paid to us are 100% cash back to clients. We have returned more than $6 million of cash back directly to clients, and the access to institutional, low cost, and clean share classes or institutional share classes, all through 100% cashback, we have saved more than $20 million of savings to investors already, and we want to continue to grow that so that investors can achieve better outcomes. But even saving 1% in fees, which is typical for the Endowus FundSmart platform versus other platforms, leads to a compounding in returns that leads to a 245% difference in returns over a 30-year period. So saving costs is no small matter, and saving costs leads directly to improving returns, which leads to better outcomes. So we do need to be aware of it. We need to build transparency in the industry, and Endowus will continue to lead the charge in helping individuals succeed in their investments by reducing costs wherever it's possible. And with that, I'm gonna long spiel, and our guests have been waiting for a little bit. And as we get, our attendees to stream in, I want to hand over to Deborah and Gear to introduce themselves. Welcome, guys.
Thank you, Sam. Hello, everyone. My name is Deborah Ho, and I'm country head for BlackRock Singapore, and I also run the Southeast Asian for the company. So I'm going to talk a little bit about BlackRock, the company that I'm very proud to represent. And I'm going to talk about also why we decided.
Sorry, Deborah. Just introduction here, and then.
Oh, okay, sure.
Yeah, and then we'll let you go. Sorry.
Okay, that's okay. Yeah, I'm not going to tell you the story about my large extended family, so let me hand it over to Gia.
Okay, thank you. Thanks for having me, everyone, Sam and you. My name is Gia Raspuskog. I head up the retail and wealth distribution for BlackRock in Southeast Asia. I've been working in the index world for a number of years before then, mainly in our iShares ETF business, both in London and Europe, and also in Hong Kong and now in Singapore. So pleasure to be here with all of you today.
Great. Thank you guys for joining us today. And, both wonderful partners, Deb and I have been, working together to try to bring these, closer collaboration with BlackRock and Endowus. And so wonderful to have you and Gear, especially because he has a lot of expertise in the iShares business across Europe and Asia. So really wonderful to have you. And both based in Singapore. So these are the 4 BlackRock iShares index funds that are now available on Endowus. We do want to highlight that we've already had a lot of BlackRock funds, mostly active funds in multiple strategies, and we have included them into some of our satellite portfolios. But this is the first time that we are bringing in low-cost index funds from iShares, the iShares range from BlackRock. But also we have put them into the flagship portfolios for the first time. So that just happened last week. So this webinar is very timely for us. And with that, sorry for interrupting you earlier, Deborah. Now this is your turn, so please go ahead.
Thank you so much, Sam. So, so why are we talking about BlackRock, and why are we choosing to work with Endowus? So BlackRock is the world's largest asset manager. We have 9.1 trillion of assets. But what is it that we actually do, right? I mean, if I ask any of my relatives, I mean, frankly, they can't tell the difference between an asset manager and a bank. So they're all familiar with banks. You deposit your money at the bank, you earn interest on your savings. You need to buy a house, you mortgage that house to the bank, and you borrow money from them. In contrast, asset managers like BlackRock, we help you grow your money. So in essence, we help you choose where to invest your money in a way that aligns with what you are trying to achieve. And we call them goals. So while banks keep your money safe and provide you with loans, asset managers like BlackRock are fiduciaries. That means it is our duty to take care of your money, but more importantly, we also help your money grow. So at BlackRock, our job, managing your money is what asset managers often call managing other people's money. It's the business of OPM. So we help your money grow in a way that's aligned with the global economy as well as your goals. And we help people invest towards a purpose, whether you are a parent investing for your child's education or building your retirement savings. So it's not investing for investing's sake, but investing for a purpose. So we're here to help more and more people experience financial well-being. Really, what does well-being mean? Financial worries are probably one of the top causes, of stress for all of us. So our job at BlackRock is to help relieve some of this stress by helping people achieve these financial goals. And in the world of asset management, scale is really, really important because this translates into lower costs and lower fees for the end investors like yourselves. And so larger companies like BlackRock, we are able to gain efficiencies, and we're able to bring costs down by leveraging technology and other kinds of economies of scale. So this is crucial because lower fees equals higher investment returns for our clients, very much similar to what Sam talked about earlier. So with our scale, BlackRock also makes quality investing more available for everyone. So that's democratizing investing. So for many people around the world, they don't have access to capital markets, and they need to begin shifting from saving to investing because there is a difference. And so through our iShares and ETF index funds, we have enabled millions of new investors access high quality investment strategies at good value. Slide 2. Okay, so this year marks the 35th anniversary since BlackRock was first founded. Our history dates back to over 30 years ago, where we had a bunch of 8 guys and some gals in a room with their Charlie's Angels, hairdo and that kind of thing. And what they did was they decided to start their own asset management company, and very happily, some of them are still running the firm today. And this is the spirit, which the firm continues to be managed, because their main concern was to put clients' needs first and really bringing value, the value of investing, to everyone. So running a fund, a founder-led company, where your name is on the door, really has a different purpose. So our sole focus is asset management. That's all we do. I mean, unlike some other players in the industry, we are not like, the poor cousin or the asset management arm of a bank or financial group. Our sole purpose is to manage money, and we also know how to leverage technology to that purpose as well. So being the largest asset manager in the world, we are entrusted to manage more assets than any other asset manager globally, and we have 19,000 employees serving clients in over 100 countries. And in Singapore, I'm very happy to say that our office has grown too. We are now 650 people here, and we're probably one of the largest foreign asset managers here. So I mentioned the importance of scale earlier. And besides scale, what's also very important is the ability to have the right components when it comes to investing. And so I said that investing is not for investing's sake, and you really have to do this to achieve a particular outcome. And so in order to do this, we have a broad range of tools that we can pick and choose from in order to achieve the outcomes that you are looking for. So, if you want to think about it this way, imagine that, you're planning a dinner party. You need to plan different kinds of food, for your guests, in order to achieve, a favorable and a happy experience for everybody. And so by providing a variety of dishes, you can easily cater to different preferences, right? So in the same way, BlackRock provides a diverse platform of solutions. And that is, in a way, what we do to cater to different investing preferences. So as you can see from our slide, over 60% of our assets under management is attributed to iShares and the index platform. And as of December 2022, we manage $5.6 trillion in worth of iShares and index solutions. So on slide 4, please. So some people say that BlackRock is a technology company. We are an asset manager in the business of managing other people's money, but technology is core to our business. And so investing, you would have heard this time and time again, is how you manage risk. And as a large firm with over 9 trillion in assets, you really need to know every line item. Okay, and so Aladdin helps us do that, and it is our proprietary risk management platform, which basically is a strong differentiating factor. So how did our partnership with Endowus come about? Well, if you think of who you like to work with, right? You like to work with people who are aligned with you in terms of purpose. And Endowus's philosophy, as you heard from Sam, is centered around providing value for money through low, fair fees. And so our mission at BlackRock is to provide more and more people with access to investing. And given our scale, we can offer low-cost, efficient solutions. So both firms, Endowus and BlackRock, are aligned in our values, and we've basically established a common vision to make investing accessible, affordable, and transparent to more people. And so we're very excited to be able to launch 4 of our iShares index funds on the Endowus platform. And true to our common purpose, the funds are among the most affordable index funds available in Singapore. So one of the things that I'm also excited to tell you about is, well, our office in Singapore, we have 29 different nationalities, 600 over people. And one of the colleagues that I'm so excited to have in Singapore is Geir Espeskog, who is Norwegian. He's our head of wealth for Southeast Asia, and he's going to talk about the benefits of index investing and why we are so excited for this launch. Geir.
Wonderful. Thank you, Deborah. Before we get to Geir, we do have this small piece where we want to introduce, because a lot of our investors are new to index or passive investing. Many of them are retail investors. So I'm going to quickly hand over the mic to Hugh to talk about this briefly before we hand over to Geir to speak specifically about BlackRock's index investing options. So thank you, Deborah, for joining us. Thank you.
Thank you.
Thank you, Deborah. Hi, this is Hugh. I'm the Chief Investment Advisory Officer at Endowus. I just want to spend a bit of time just walking you through the difference between passive index investing and active investing. So as you can see in the chart, the products that we're trying to introduce, or Geir's trying to introduce today, are passive index funds by BlackRock. And the passive index funds aims to track the broader index, such as the MSCI World Index or the S&P 500 Index. And it invests in the same basket of equities that are in the benchmark indices. And because it's doing that, it's typically cheaper than an active fund, which aims to do bottom-up stock picking in stocks. And the aim of active funds is to outperform that particular index. So if you look at the chart here, yes, you can see that over a long period of time. So this is shown over a 5-year period. Investing in passive BlackRock iShares Global 100 from 2017 to 2022 would have roughly doubled your money. Whereas the average active global fund during that same period would have returned you 1.5x. So what this is showing you is that despite some active managers outperforming the index, on average, a passive index would do much better for the average investor trying to accumulate wealth. This is another chart showing the same story, which is from 2002 to 2021, over a broad 20-year period. You can see that out of the 2,800 US domiciled equity funds, less than half of them survive. So when you talk about active funds that have done well, normally there's a survivor bias in there, whereby you're only looking at the ones that have survived, and only 18% of the ones that were inception in 2002 have actually outperformed the index. So it's actually very difficult to pick the managers that outperform a passive index. And even if you do end up picking that outperformed fund, like you see on the chart on the right, the top quartile of outperformance in outperformed funds, only 21% will end up outperforming again over the subsequent 5-year period. So it shows you that while there is a place for active managers in your portfolio, for the average investor, it is much better to go with a passive fund with low cost fees that aims to replicate that index with a low tracking error. So this is explaining the difference between passive and active, and I'll hand it over to Gear to talk specifically about BlackRock iShares index investing.
Perfect. Thank you, Hugh, and thanks, Sam, for the intro. It's great to be part of this launch of 4 BlackRock iShares index funds on the Endowus platform. We already heard about what I would call the power of indexing in terms of generating great long-term returns for investors, and also the power of saving cost over time as it compounds. So over the next 15 minutes or so, let me take you on a quick tour of the exciting world of index fund management. We think it's exciting. We're index geeks at BlackRock. I'll show the impressive growth. You can see it here. I'll explain what's driving this growth.
Just want to add that it's to us. Yeah.
Okay, excellent. So I'll explain what's driving this growth. I'll show you why managing the index strategies can actually be harder than many would imagine, which is why BlackRock is the leading index manager with a long history of pioneering index management. And finally, I'll also show you, at least at a high level, how we think about incorporating index funds in a portfolio context. So turning to this slide, the way we invest now, for the first time, you can actually see that equity index funds are about to surpass equity active funds in popularity. So slowly but surely, investors have embraced the benefits of an index investing. And the black line, just to know what you're looking at, the black line at the bottom is equity index funds. The gray line is active equity funds. You can see that they're about to cross. The green line is the sum of both. So that's all equity index funds. So we believe actually that the indexing story has a lot of runway, and it's just still in the early days, and especially here in Asia. Globally, there's now $20 trillion in index funds. That's across all asset classes and funds and strategies. This is a big number, but it's only actually 10% of investable assets in the global markets. So we're just at the beginning. There's more runway for growth. And if you go to the next slide, I've got 4 kids and they love playing FIFA on their PlayStations. I think Deborah also has 4 kids, so I don't know. It must be a thing, at BlackRock. But anyway, it inspired me to think about this quote from the famous football player Lionel Messi, who said, "It took me 17 years to become an overnight success." And the point I'm trying to make is that although you may take it for granted today that index investments are 20 trillion and they're very popular, this is really taking years of product innovation and actually pushback from a lot of clients. It's taken process improvement, client education, and really this relentless focus on flawless execution at scale. So why index funds? if you take a step back at the next slide, what is index investing? Index investing is basically just a range of investment strategies that try to track the return of a specific collection of securities, for instance, a country or a region or a sector or a theme, and it's trying to track that in a systematic and rule-based fashion. And since the launch of the first index fund in 1971, indexing has expanded and can now be accessed through various investment vehicles. There's index mutual funds, there's what we call customized mandates, and then there's the exchange traded funds. And we're talking about the first category today, the index mutual funds. So why should you invest? Well, it's 3 points here. One is efficient access. Basically, there's an index fund for almost every market exposure and investment strategy out there. So you just get access to all this in a very convenient and easy way. And more choice allows investors also this flexibility to build the kind of portfolios that generate the outcomes they're looking for over time. The second one is low cost. We talked about it, but index funds are cost-efficient vehicles that gives you exposure to a range of markets. And thirdly, diversification, the power of diversification, I think everybody's aware of. Index funds provide huge exposure to broad-based. So with one little fund, you can invest, I don't know, $100. Don't know what your minimum is, Sam, but with that $100, you can have thousands of securities in an index fund. So that's really powerful to get that diversification. It is okay. Okay, good. Thank you. So if you go to the next slide, so that's why index funds. So managing an index is so easy that everyone can do it, right? That's what I think you called it passive investing. Many people call it passive management. Sounds like you buy it, you go to the beach and just leave it alone, right? It sounds like there's nothing to do, but in fact, managing an index portfolio requires very active involvement and thousands of active decisions every year. And the reality is that indexing it's a basis point game, right? When you charge 8 basis points or 0.08% per year, and one mistake can actually cost double that, then there is really no room for error, right? As a manager like us, because if we have a 16 bips error on an 8 bip fee, we're going to spend 2 years just recouping that loss and that error. So managing index portfolios requires significant scale, technology, precision, and robust operations. And a lot of consideration goes into behind the scenes of minimizing tracking errors so you get tied to the index, minimizing your costs, and then also maximizing portfolio liquidity. So it's like a triangle. You try to optimize between those 3 things, tracking error, cost, and liquidity. Significant investments are required to build an in-house index business. That includes capabilities in index research, portfolio management, risk management, and then obviously there's the people and the platform, technology, and process. And just imagine for a second an index like MSCI World, all countries. So I know you have MSCI World, but all countries includes emerging markets as well. So it's slightly different index, but you're dealing with nearly 3,000 stocks in this fund or portfolio across 49 developed and emerging market countries, and an average of 3,900 action points and decisions every year. 3,000, that's just for this one fund. This includes things like, what does that mean, these actions? It's how do you handle special dividends? You get things like scrip dividends and option dividends, and you need to choose which one, should I take the stock or the cash? Corporate actions, mergers, demergers, spin-offs, all these things. Index rebalancings, which happen either monthly or quarterly, and then you need to manage optimal cash balances inside the fund. And so the good news is, it sounds all difficult, and I'm not going to go through any of the points on the slide. It's just to make sure there's a lot of stuff that goes into it. Good news is BlackRock has the technology, it has the scale and experience to do this exceptionally well. So when you buy an index fund from BlackRock, you get all these things, all these people with the experience, the technology, and the research at a very low cost because of our scale. And that takes me to the next slide. this is why clients entrust us with this 5.6 trillion that Deborah spoke about of indexed assets across equities and fixed income. It's really about expertise in managing. We manage over 2,500 index funds across more than 1,000 benchmarks from different index providers. We have traders with expertise across every single major market and asset class globally. We trade $8.43 trillion of assets a year. 8.4 trillion. That gives us scale, and it makes us very competitive when it comes to costs. We can negotiate good trading costs. And then the third thing is operational scale and ecosystem around which Deborah spoke about Aladdin. We use Aladdin on the indexing side, which seamlessly integrates all the capabilities of the dedicated portfolio management, research, trading, and risk management teams. So index portfolio management at BlackRock is not just about mechanically buying and holding the assets that make up the index. We consider every aspect of the investment process in detail. Like I told you, we're these index geeks, and we capitalize on every little thing available and every opportunity available within the predetermined risk and cost limits to make sure that we track exactly as tightly as possible with as low cost as possible. And that's how we can offer things like at 8 or 9 basis points to end clients. So let's talk about history. Next slide. In the early days of investing, managers picked stocks, and they still do, by the way, but they only picked stocks. But as the team at Endowus shown earlier, stock pickers more often than not find it hard to consistently, that's the word, consistently beat the average stock market or the index over time. Therefore, a simple idea and innovation came about. If it's so hard to beat all the stocks, why don't you just own all the stocks, and then you're guaranteed to perform in line with the market? And this was really the simple idea. Back in 1971, there was a small team of quants in a San Francisco bank that created the first index product. That team became part of Barclays Global Investors, which later became part of BlackRock. So therefore, we can take credit for being sort of part of the innovators of index funds. And we're the first fixed income index manager all the way back to 1984. And then obviously part of the index story is ETFs. The first ETFs were launched back in the early 90s, actually in Canada. And then 20 years ago, also the first fixed income ETFs were launched by BlackRock globally. So the innovation and choice continues to drive more demand. As you can see from the chart here, it's going up to the right, top right. And this demand is driven by this choice and innovation. And today we're giving investors in Singapore more choice. So we see the growth continuing. Now, next slide. In the index business, having scale benefits investors. And I talked about that. Because of the scale, we're able to lower execution costs significantly. And I mentioned that earlier. And this is just an example of that. For instance, in fixed income, we traded about 8.2 trillion last year, making us one of the largest counterparties for every broker dealer making a market in fixed income security, at least every significant broker dealer. So we negotiate very competitive trading agreements with brokers. And secondly, because we have such large volumes, they also create opportunity to net flows. That means that between different portfolios, we manage 2,500 index portfolios. One of them might be a buyer, another seller, and then we don't have to go in the market and trade. We can net it off. So both these points benefit investors in the fund because lower cost means higher returns. They go straight to the bottom line. So finally, at BlackRock, on the next slide, you can see technology and risk management are critical to everything you do. I said there's no room for error. So we are laser focused on superior index tracking by managing returns, risk, and costs. Those are the 3 boxes in the middle here. And we have a secret sauce that helps us achieve this operational excellence. You already know what that is. The secret sauce is called Aladdin. And what is Aladdin? It's really a proprietary system that connects information, people, and technology in real time. And that's important. Not everybody does that. Some people manage in spreadsheets and kind of send them around the globe. It's in real time, and it supports the entire life cycle, including trading, investment operations, risk management, and performance analysis, and so much more. And we can talk about it for hours, but I think you get it. All in all, Aladdin is our core tech that does all the heavy lifting when it comes down to portfolio and risk management. So at the very end here, just how do you use these index funds? Well, it depends on your circumstances, of course. But a very common way of constructing portfolios is through what we call a core satellite approach. And you can use the 4 index funds as a core, low-cost, diversified exposure. And this becomes, in a way, your strategic, stable, long-term asset allocation, or it can be. And then you can add tactical and more actively managed investments, which we call satellite allocations. And these satellite allocations can serve as a nice, return enhancement, depending on the specific investment that it's allocated to. It could be much more concentrated active funds. It could be thematic funds, and any of the other goodies that are on the excellent Endowus platform. So this concludes our tour through the exciting world of index management. Let me quickly sum up. Indexing is going mainstream, and index equity funds are about to surpass active equity funds in asset size. Index fund popularity continues to grow because they provide efficient, low cost, and diversified access to both equity and fixed income markets. And managing index funds is complex, involves thousands of active decisions every year. And we are at BlackRock a leader in index management because we have more than 50 years of indexing expertise. We have scale benefits, which reduce costs. We have a powerful technology and operational platform, which helps reduce risk, reduce costs, and improve returns. Thanks for your attention. I hope you are as pleased as I am about the availability of these index funds on the Endowus platform. And it allows investors in Singapore to build low-cost, institutional quality portfolios with all their savings and hard-earned money. Back to you guys.
Thank you, Gia. That was fantastic. Loved it. Thank you so much. At this point, before we go on to some of the other slides that we had prepared, I wanted to answer some specific questions. And there are 3 questions that really stand out. One was related to somebody asking us, can Endowus and BlackRock please work together to bring in passive, Irish UCITS domiciled ETFs so that we can benefit from the 15% portfolio level US withholding tax? That was the first question. The second one is somewhat related. They were asking, what is better to invest in, the Irish domiciled CSPX, or is it Endowus? Endowus seems a little bit cheaper. And then there was another question, which is on the S27, which is the Singapore-listed index fund for S&P 500, but it's the SPDR fund from State Street. And asking if it's which one is lower cost. Is S27 cheaper in the long run because they don't have platform fees, etc.? And it's interesting because there are, as Gia said, a lot of options that exist out there for passive index funds. Unfortunately, here in Singapore, for a Singapore retail investor, investing in an index, let's use the US S&P 500 because all these examples and questions are S&P 500. There is only one US S&P 500 listed ETF. There are no BlackRock iShares ETFs listed on SGX. There's only the SPDR from State Street. It's actually more expensive than the iShares US index funds. Your iShares US index fund is 8 basis points, as Gia highlighted, 0.08. This SGX listed SPDR is 0.09. But not only that, it has very poor liquidity. So there's a bid-ask spread. So on an ETF that's exchange listed and therefore traded on a stock exchange, people buy and sell shares, but it's not always at the underlying net asset value or the NAV of the fund. It can actually be at a premium or discount, and there's obviously a bid and an ask on the pricing. And when there's less liquidity, a lot of like iShares ETFs are very liquid, whether it's in the US or Europe, UCITS, very liquid and big funds, which take advantage of the scale economies that Gia highlighted. But this particular one from State Street, very low liquidity. And what happens is that the bid-ask spread widens. Oftentimes, this particular S27 ETF has bid-ask spread of almost 1%. So even though you're paying 0.09, the bid-ask spread you're paying is actually 1% to buy and 1% to sell. So that's tremendous. The other thing is that even though it's listed on SGX, it's actually US dollars. So it's US dollar denominated, not Sing dollar denominated. And therefore, there is an FX cost involved when you go through a broker to buy the US dollar fund. And therefore, I think there's embedded costs from an FX perspective as well. And so those are things that you need to be aware of. And the final thing is obviously it doesn't exempt you from the withholding tax. And going to the withholding tax, I think, the UCITS ETFs are an efficient, more tax efficient way to buy the US market because of the 15% within the withholding tax discount. But I love the fact that BlackRock iShares US Index Fund is a synthetic replication. And we're going to have to answer that question as well. But it allows us to, bypass in a way the withholding tax because it's an E-mini futures replication. There is obviously no dividends being paid out, but the index that they track is a total return index, which incorporates the dividend returns. And therefore, the iShares US Index Fund have actually had, a wonderful track record of replicating the S&P 500 total returns in a very, very efficient manner. And so we love the fact that iShares US Index Fund actually incorporates all of those factors and makes it a more efficient way to replicate the index. So with that, maybe Gia, this might be the opportunity for us to answer that, question about synthetic replication and physical replication that a lot of people ask. And, is there risk? Is there, what are the benefits? And I answered it a little bit, but maybe you can also give kind of like a 101 on why some ETFs and index funds are synthetic and some are physical.
Sure, thank you. And I think the S&P 500 is a synthetic index fund. It basically has a swap. The swap is collateralized, meaning that you do a swap with the bank. They guarantee to pay you the S&P 500 returns or total returns, and as collateral for the money that we give them, we hold a basket of collateral of high quality collateral, and it's over collateralized as well. So that's managed every day. And I talked about Aladdin. Aladdin goes into managing this in a very efficient way. So there is any counterparty risk is incredibly tightly managed, and I would say because it's over collateralized, there's more collateral than the value of the portfolio. So if anything were to happen, you can easily replace it because they only pay you the return of the index in the swap. They don't actually pay you anything else. So the daily, every day you have it marked to market and you readjust everything to make sure that there's only sort of a daily risk of anything happening. And that's never happened before in our 35-year history of managing funds that have a synthetic replication. Now, the benefit of why we're doing this is clear for investors, is the fact that the withholding tax then becomes zero. So this is actually more efficient than the Irish domiciled ETFs on S&P 500, because instead of saving half of the withholding tax, the withholding tax is 30%, right? So every dollar that a U.S. stock is into the fund, the U.S. tax of 30 cents is withheld. For the ETF, because of an Irish tax treaty with the U.S., the ETF receives 15 cents back on that 30, so they pay a total of 85. The synthetic index fund pays zero, so it receives 100%. So that's a huge pickup. I think S&P dividend yield now, it's not huge, but I think it's around 1.6%. So you receive the full 1.6% which is a massive benefit, I think.
Absolutely. Yeah, wonderful. So on a 1.6% yield, and the typical range is actually, we're at the low end of 1.6. It has been as high as 2.1. So that is the normal range of the S&P 500, and a 30% withholding tax would mean that almost 50 basis points of your dividends that should be yours are being withheld as a tax by the US government. And you would, get maybe 25 basis points of that back with the Irish domiciled UCITS ETF. And this is important because only Ireland, if it's a Luxembourg domiciled ETF or other UK domiciled ETF, you don't get that benefit either. So not all European ETFs get that discount, only the Irish domiciled ones. But then by replicating the iShares S&P 500 through this iShares US Index Fund, you actually get all of that 50 basis points back in a way, in terms of performance. So that's a tremendous
exactly
thing.
And I'm sorry, I get all excited now, but I mean, compared to the fee, I mean, this is a main or key driver of cost, right? And it's sort of hidden, so it's important to understand this when you invest.
Yeah, absolutely, Kia. One other quick question that people had was, because it's synthetic replication, they are talking about maybe a slightly higher tracking error. And sometimes that tracking error, is because it gives you positive returns. But regardless, it is slightly higher tracking error than others. Is that a concern, or is that something that we should be aware of? Or is higher than others, but it's not meaningful enough for us to be worried?
Yeah, it's a good one. Well, theoretically, a swap-based ETF should have zero tracking error. And tracking error being defined as the standard deviation of the daily return difference, right? So it's tracking difference is how much you performed relative to the index over a year, and tracking error is how much that swings every day. So those are two slightly different terms, but in theory, the swap, because the counterparty is obliged to pay you, contractually obliged to pay you the exact return or the exact total return of the underlying index every day. You will just receive that cash flow, so it should, in theory, be lower than a physically replicated fund.
Wonderful. And I think it's also because maybe this particular index fund is a relatively short history, and it's a smaller fund at the moment, and therefore it looks like that. But really, in terms of replication, it really is tracking that index.
Yes, and it some of the things that can drive a little bit of tracking error there is in and outflows of the fund from investors. You need to manage that. That's one of the thousands of decisions you have to make. Like, do I add to my swap, or do I keep a little bit of cash to make sure that I can efficiently give investors back the money without having to touch the swap? So everything is an optimization based on experience and anticipation of client activity, plus all the other activities and actions that happen in the fund. So yes, that will create a little bit of tracking error. And the bigger the fund is, the easier those type of things are to manage because of scale.
Yeah, absolutely. Some of the other, tax related, especially, people are worried that, if you have local US listed ETFs or stocks, you have the estate with, tax risk that also exists. So somebody asked that question, but obviously this is a Singapore registered and an Irish domiciled underlying, product. Therefore, there's no US domiciled fund structure in any of this. So there's no risk of estate tax from the US. And also just, as the fund scales, does that mean that, somebody's asking, the fund fee level would actually come down further from the 0.08? Is that a possibility?
There's no
It's already so cheap. I don't know why.
it's already pretty low cost, but there's no automation in that. But clearly that's been the direction of travel for all our ETFs and index funds over time, and we end up passing some of that scale benefit back to investors. And obviously competitive pressures help keep everyone, help keep everyone on their toes, so to say, which is good for clients. So, that's why we're able to offer the index fund at sub 10 basis points here today. So I'm not promising any price reductions as assets go up, but if it does happen, it'll be a nice surprise. But you have to compare that to the tax benefit of on the dividends, and then the fee becomes quite small.
Yeah, the fact that that the withholding tax is a massive advantage for our client base. Also, the fact that it's Sing dollar denominated. BlackRock will efficiently make it Sing dollar denominated, so the FX cost is virtually going to be very little, if any, versus if you had to invest in a US listed ETF or an overseas ETF or even the SGX listed SPDR. You have to translate, and as a retail investor, we're often given a very bad deal in terms of FX spreads, massive, as Kia said, often 20, 30 basis points. I've seen some of this. It's ridiculous. And, which is another exciting thing that most people don't know. And Kia, I don't know if you know, but Endowus actually has on its app an FX, conversion tool. And we, being an independent, financial advisor, we don't use FX as a primary service. And so it is a tool for you to convert currencies so that you can have, multi-currency investment options on the single Endowus platform. And we don't take a spread at all. So it is the wholesale bank rate at 3 pips, which is 0.00003, as opposed to 30 basis point spread sometimes people take. So it really is the lowest cost way to convert FX, even cheaper than TransferWise and Revolut and all those. So that's another interesting thing that Endowus has incorporated that allows you to have further services that are really beneficial for our investors.
Okay, well, you've sold me, so I'm gonna take a look at that service for sure, Sam.
And then finally, Gia, you knew this was coming, but there are some questions about, are we going to take this into CPF? And, from Endowus's perspective, we would love to, but there are a lot of things that we need to do, guys. You've seen the struggles we've had in bringing products into CPF. It's not an easy process. We need the fund manager support, but also we need scale and business. And so we would ask your support in continuing to grow the Endowus platform. We just crossed $1 billion of assets for public pension on our platform across CPF and SRS. So that's really exciting that we've, even though the market had a downturn last year, we continue to grow our assets, and that's been really exciting, and we've announced that. But Gia, maybe just a quick, you don't have to go into detail, but we knew this was coming, so want to hear from you.
Look, we would love to, that's the bottom line, to do more on CPF and pension savings. Deborah talked about creating better financial futures. It's sort of a fancy way of talking about the long term, and pension is all about long term. And I do think, how should I put it? I do think there's, from a personal view, and I think you would all agree, and the listeners would agree as well, that there's a lot that can be said for making pension savings maybe easier to manage and allocate in, and the choice maybe needs to be improved. And some of these systems, probably on purpose, are very conservative because it should be long term. But I definitely think there's some upside in improving the choice and the platforms and the interfaces that we deal with on the pension side. And that's not just something that we at BlackRock can do something with. We need partners like you. We need to come together with local regulators and the community and change that over time. It doesn't happen fast, but I'm very optimistic that the choice on the pension side will slowly but surely evolve and improve.
And we've been talking about equities a lot, but look, these are the first really low cost fixed income index funds to really be in existence in Singapore, right? There's no SGX listed ETFs or many ETFs even for fixed income. And we have both the Global Ag, but also the emerging market government bond fund, which we're really excited to bring into Singapore with BlackRock. So we're really thankful for BlackRock for doing this. But really, I want to go back to our first principles that Endowus and BlackRock are so aligned in our values and the way we want to be fiduciaries to our clients. The fact that we're actually agnostic in our approach, that BlackRock has active, I mean, they are the biggest passive, the biggest index fund, and they actually have index funds and ETFs, which are underlying, similar structures. The reason Endowus chooses index funds over ETFs is because, our investors are investing for the long term, especially for pension money, and therefore we don't need intraday trading, and trading once a day at the NAV at the close with no discounts or premiums or bid-ask spreads, and doing it efficiently and working with partners like BlackRock to bring in these wonderful products like the iShares US index funds with zero withholding tax, efficiently in Sing dollar denominated, locally registered, and potentially, we can take this into the pension program and stuff. That's what we need to do. We need to localize and meet the needs of our clients here in Singapore. And these products are wonderful products. And so we're agnostic. It doesn't, we're not just about passive. We're not just about index. We're not just about active or alternatives versus public. It's not about ETFs or index. BlackRock and Endowus are perfectly aligned in trying to find the best solutions and the best products and making that available to our clients so that they can invest for their investment purposes and achieve their outcomes. So I think that's just really exciting for us to be working with a partner who is so perfectly aligned with us. And with that, I'm going to just quickly show the mechanics. So on a FundSmart platform, to access these iShares index funds, you need to select an own fund, because on the Endowus platform, you have, one-click advised portfolios. So we'll talk about the flagship, RPC and the portfolios later, but you can choose an own fund. And when you do that, you select your goal type, which is mid to long-term investing as opposed to cash management. And then your funding source, which you can choose between cash and SRS. BlackRock iShares are available for SRS investments on a regular savings plan as well. And then your personal risk tolerance. And then you just type iShares and you get the full list and all the details. We really have tools where you can actually build just by one single fund, but create an iShares portfolio of all 4 funds. And you just have only 4 iShares funds in that single portfolio that you've created for yourselves. You can allocate between equities and fixed income, between emerging markets and developed markets, and then build that for you. And the moment you click the approval, then you have a huge tool that allows you to give historical performance, not at the fund level, but at the portfolio level. At the portfolio level, you get the historical performance, the best worst returns, average returns, the portfolio level fees, and then you have Monte Carlo simulations depending on how much you invest every month on future outcomes as well. So there's a whole tool, and then you have the sector, country breakdown, fixed income equities breakdown at the portfolio level, not at the fund level. So those tools are available on the FundSmart platform. FundSmart is the only tool that allows you to build these kind of DIY portfolios and to get all this information, and also compare these funds versus other funds if you want to as well. And then on the flagship portfolio, which is our advice portfolio, is where it's the first portfolio of choice for most of our investors, especially investors who are not sophisticated or don't want to bother. We have pre-built portfolios that have been optimized by Hugh and the investment office, Sean Wong and Min and the team who work really hard to bring the best solutions and the best portfolios for you. We have included the iShares and US index and the developed allocation at 30%. And then for the fixed income, we put in both iShares again with a 20% allocation initially. And all you have to do is currently you have that notification on the top right that tells you, flashing, that you have an action to take. And we intentionally decide to do this in an advisory process. So we call it a recommended portfolio change. It's not a discretionary change that you as a client do not have a choice in. This is really critically important for us because in Endowus, we believe that you need to understand exactly what you're doing with the portfolios that we're recommending, why we're making those changes. And that's why we have deep insights articles, processes on the app to educate you and help you along the journey. And then you know exactly what we're doing with your money, what you're going to do with your portfolio. And then you make that decision for yourselves. And in that process, we give you all the information you need, and then a quick two-step verification in order to allocate that, and then we will execute for you seamlessly. So those options are all available on Endowus in a seamless experience. So if you have any questions, and we obviously have a deep bench of MAS licensed representatives who are here for you as client advisors, you can reach out on email, phone, a consultation every Friday at 12 p.m. You can join us again at lunch for experience Endowus session where you can ask questions or interact with our client advisors and other clients sometimes, so that you can understand the platform better. And we're happy to assist you along that journey. So with that, I want to wrap up. Kira, any last thoughts or messages, or goodbye?
I just want to say again, I'm really excited to be part of this launch of the 4 index funds, and I'm impressed by the progress you and the team are making to bring better investments to clients in Singapore, but also now in Hong Kong. So well done, and I love to follow you guys. So please invite me again to a Friday if you want me to speak, and if you thought I did a half decent job today.
Oh, absolutely. You were wonderful, Kier. And it was a real pleasure having you on the webinar. We'll do it again soon. Thank you so much. Thanks, guys. Thank you, our clients and everybody who joined us today. The content will be up on YouTube. Please click subscribe here so that you can get notified for any good content that will be coming your way. Also, there's a lot of blurbs where you can reach out to support@endowus.com if you have any questions. Or links to get going on your investment journey on the Endowus platform. So with that, thank you so much for joining us in this valuable lunchtime. Thank you, Gear, and also Deborah, who had to leave a little bit earlier for other commitments, and Hugh, who is debuting today. So thank you, everybody, and have a wonderful afternoon and a wonderful long weekend. Please enjoy it.
Thank you.